All right, ladies and gentlemen, how you doing? It's your boy Sean McLaughlin. It is the All-Star Options Jam session for Thursday, June 13, 2024. Hope you guys are doing well. We got some stuff to talk about. We've had the bull market is looking like it wants to rip higher. We are positioned well for that, I think. We have some positions that are testing our patience, certainly, and we'll get into that. But it's interesting market we're in right now, and are we going to get a summertime rally? Wouldn't that be fun? But anyway, before we get into any charts here, let's drop the old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way from following my process. Also, I'm going to monitor the chat in YouTube there. So if you guys have any questions, go into the YouTube chat box there and type in a question. I'll do my best to address it if I can. Yeah, we'll do all that. And by the way, for those of you who are new here, what we do here in the All-Star Options Jam session is I give you kind of a higher level overview of what I think is going on in the markets, and then we dig into action that has taken place in some of the trades that we are in All-Star Options. We review any exits that we've taken over the past week, any, whether for a loss or for a profit, any adjustments we've made to positions if needed. And then we will go into updating stops on a lot of open positions. We have a bunch of open positions on, and so we're going to update some stops. We don't update stops on every position, but the ones that need it, certainly, we will update those stops. And then we'll do a quick little rundown of new positions that we've put on since we last spoke. All right, so let's bring up my charts here. Where are my charts? There's my charts. Okay. All right, so let's start at the top here. Here's the S&P 500. As you can see, this week we've had a big breakout here to fresh new highs. These are all-time highs in the S&P 500. NASDAQ, similar story. NASDAQ's looking even stronger here. NASDAQ really broke out last week, and it's just following through this week. Things are looking good. If you're a bull, you're happy. If you're a bear, you're having a hard time right now. And, the market's sending a lot of mixed signals. Sure. A lot of these gains are being driven by the biggest names, the big caps, your Apples, your Microsofts, your what else? Tesla, right? The big names. That's what's driving gains right now. And that's okay. That's okay. You want your best players to score the most points. That's why these indexes work. But we're in a bull market phase here, so it pays to be in long positions. Let's just pull up the VIX here real quick. I don't know why that always goes to VIX-M. I don't like that. But here's VIX. Yesterday we had a nice big steep sell-off in VIX following the FOMC. We're staying low today. I mean, this is just a continued signal. We've been talking about this a lot for the past couple of months, that there's really no real cause for concern in the market right now. We had a little blip here in the mid earnings season, I guess, or I'm not exactly sure what caused this little spike here, mini spike, but we're hanging at the lowest levels that we've been all year. These are low levels that are pre-COVID. So, I mean, I guess people are just waiting to see. I guess the election silly season hasn't begun yet. I thought we'd start getting into election silly season. I don't follow the news all that much. I don't know what's going on in politics. I don't care what's going on with the election. But I imagine that's going to start. The narratives are going to start spinning up pretty soon, and that could make for some interesting rides in the stock market, both up or down. And we'll probably see VIX rise if there's any uncertainty coming into the market around that. All right, so let's go into, we don't have a whole lot to talk about as far as closed positions this week. We only have two that have closed. We have one that's been flirting with the close, and we'll talk about that. But let's talk about Wells Fargo first. Wells Fargo, this was a trade we got into back in January. We bought January 60 calls, so 12 months to expiration. We bought them here for $1.75. It looked like we had top ticked this thing. I mean, the stock immediately sold off after getting in, but it never did trip our stop loss level, thankfully, because it held on and had a nice big run. We eventually sold a third of our position over here on April 19th. all according to the plan that we laid out when we put the trade on. We wanted, when we got to $60, 60 was there, 60 or 61, I can't remember exactly. I think it was 60. But when we got to that price level, we wanted to sell enough of the position to pay us back our original investment. So we paid $1.75 for this position. I was able to sell a third of it for $6.15. That paid me back all of my original investment and a little bit more, which locked in some gains, which was great. You know, it looked like in mid-May, it looked like it was going to follow through and give us a lot more upside, but the market had other ideas, and it closed below our stop out level of 58.50, and we exited this trade, I believe, on June 7th. And we got out of the remaining 2/3 for $4. But hey, still a great trade, right? We paid $1.75 on the way in. We sold 1/3 of it at 6.15 and the other 2/3 at $4. So a nice win. We will happily take it. We'll happily book that and on to the next trade. FXI, this one we just closed this morning. This was a trade that we, again, according to our plan, we legged in 3 separate buys. You can see these purple circles here. 3 separate buys. We originally bought the January 26 calls for $2. We bought another tranche at $1.75 and a third final piece at $1.50. Again, according to the plan that we laid out. This was not averaging down in a loser. That was not our thinking here. We, on day one, on this day right here, when we put the trade on February 28th, we said we want to patiently build a position here. We think we could buy them at better prices, and we were able to get those better prices. And the trade looked great. It was really ripping for us when we were above 29. I was thinking this is going to turn into a home run trade for us, and we still had till January for expiration. But I don't know. The China story seems to be running out of steam, and we rolled over pretty hard, and our updated stop level 26.50 was tripped conclusively yesterday. We closed below 26.50 yesterday, and then this morning we continued below that, and so I got out. But hey, we got out at 259. The whole position we got at 259. Our average price was a 175, right? If you average these 3 buys together, these were equal sized buys, I should point out. So our average price was 175. We got offered 259. Not the profit we were hoping for, and certainly not the profit I thought we were going to get back when we were up at 29 and looking like there was no stopping that momentum. But hey, it's a win. So both trades that we exited today, they weren't the wins we were hoping for, but they were still very nice wins. That's green points we could put on the board. That's great. Awesome. All right, next up, I'm going to go through the recent or the updated stops. We have a number of positions we want to update stops on, 6 of them in no particular order. Let's start with C Limited. Well, we're especially starting with C Limited because these options are expiring soon. Today is June 13th. Next Friday, I believe it's next Friday, right? No, yeah, next Friday. Next Friday is options expiration, June 21st. So we have basically 8 more trading days. And as we get close to expiration, we need to, you know, we don't want to give too much back. This has been a great trade for us. It's been a big winner for us. No complaints. But we want to tighten up the reins here. We don't want to give too much back. And so when we're approaching expiration, when I'm holding long calls, what I like to do is I like to trail a 3 to 5 day low, use the 3 to 5 day low as my mental trailing stop. I don't put a resting stop order in the market to sell calls. I don't put a stop order on calls. That's a bad idea. Please don't ever do that. You're asking for a terrible fill. But I have an alert. You can see right here on my screen. It's 70. It actually should be 70.50, which is just below the low on June 26th or June 6th, excuse me. If we get below 750, I'll have an alert that'll go off here on my platform, here in my office, and then I'll exit the trade. No questions asked. But look at this, man. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive green candles in C Limited. You gotta love the way it's running into expiration. The option gods are smiling on us in this position. This was a June risk reversal we got into back in late February. We sold the 35 puts and used those proceeds to buy the 65 calls. We did it right here. Well, we sold half of our calls according to our plan. We had a target here when C Limited got above 65. We wanted to sell half of our calls. That was in the plan that we laid out on day one. We sold half of our calls for $6.40. We covered all the puts for 15 cents. So we're already guaranteed profits in this trade, locked in some very nice profits guaranteed, but we still have half of our call position still screaming higher. This is position. This was a great one. So congrats to any of you who rode this position for us. But our new stop right now, our current stop is at 770.50 for C Limited. Okay. Next up, again, no particular order here on the rest. Google. This is a position we got into in mid to late April, a protected risk reversal. So instead of selling a naked put to buy long calls, we instead sold a put spread to pay for a call spread. We did it all for a 30-cent net credit. Position's looking pretty good. We are moving our stop up to 169 though. I feel like this low that was put in back on May 31st feels like a significant low to me. We also have the rising 50-day moving average kind of coming up to that level. So 169 is a level I want to see Google hold. If we break 169, then I'm going to pull the trigger and get out of this trade. The good news is that barring a monumental collapse in Google, anywhere we get out below 169 is probably going to be a profit for us. I can't tell you how much of a profit, but we already have 30 cents net credit built into this trade from when we put it on day one. So we'll likely sell if we have to get out of 169 or below 169, we'll likely sell the call spread for more than 30 cents, I would hope. So either way, it's almost a foregone conclusion that we've got profits in this trade. Knock on wood, crazier things have happened to the market, but either way, we got to stop at 169. We want to keep holding this thing. You can see this target up ahead, 190. If we get to 190, the plan was going in is that if we get to 190, we will take the entire position off, book the gains, and move on to the next trade. But Google, you got to love how the big caps are moving. All right, Coin. This is a trade we got into not too long ago. We got in on June 4th, I believe. But we're already moving up our stop on this trade. It's an October 350. I'm sorry, October 300/350 bull call spread. That means we're long the 300 strike calls and short the 350 calls. We paid 955 when we got in. It's starting to move our way. I like it. Our original stop was down here below 196, but I feel like that's a little far away now. So I'm moving it up to 218, which is a little shelf of resistance or shelf of support here from late May. We don't want to see it break this level, because if it does, that means not only are we breaking that level of support, but we're also breaking the 50-period moving average, which those are two things I don't like when I'm a trend follower, right? So our current stop is 218 in Coinbase. All right, next up, Amphenol. This one, we didn't actually change our stop, but there was a 2-for-1 stock split this week. It was effective on June 2nd. There it is, or June 12th, excuse me. 2-for-1 stock split. So this stock was formerly trading about 138 to 136. But right now our stop is 64.50. Again, this was really the same stop as before, but these are just new prices because of the split. But 64.50 is the stop in Amphenol. We don't want to see it get below that. This has been a great trade for us as well. I don't see, oh, you know what? I got to add our entries in here because the stock chart changed. I'll add our entries in here, but we got into this trade a while back, I think right in here. So this is a big winner for us. All right, 64.50 for Amphenol. Okay, next up, the last two trades that we have on that we're adjusting stops on are two bearish trades, which amazingly are working considering the crazy bull market we're in right now, right? But here's Bill Holdings. Boy, I love this this action today. We are making fresh new lows for our bearish position in Bill Holdings. We're long the September 50 puts and short the September 40 puts. That's a bear put spread that we paid 360 for. I'm moving my stop now down to 58. I don't want to see Bill get back above 58. If it does, I'm going to pull the plug and get out of this trade. But you can see down below 40. If we get down to 40, which is our short put strike, if we get down to 40, that's where we're going to take profits in this trade, whatever those profits may be, depending on how soon we get there. If we get there sooner, like if we get there tomorrow, it won't be as big of a profit. But if we get there, let's say in August, it'll be a bigger profit, right? Because the short options have to decay a little bit more for us to earn some more money. But either way, it'll be a winning trade if we get to 40, if it gets there today, tomorrow, or in September. It'll be a win. But we're raising or lowering our stop down to 58. And finally, our other short bearish trade is in Nike. Now, this one we should talk about a little bit. And I wrote a piece about this earlier this week, and we've talked about it in the chat room, which, by the way, guys, if you're an All-Star Options subscriber and you're not in our live chat room, what are you doing? Are you even trading? Are you even here? Get into the chat room. If you don't have the info that, email me. We'll get you hooked up. You should be in there. That's where all of our community engages with me. We talk about the trades we have on. I update stops in real time as they happen. So get in there. Anyway, Nike. So let's talk about this trade a little bit. This is not something I recommend, nor is it something I do very often. And there's going to be some people scoffing at me when I say this, but in this particular instance in Nike, remember, this is a short trade. I actually raised my stop. And when you're short, you should not be raising your stops. Don't do this at home, folks. Only do it on very specific occasions for very good reasons. And my reason was this. I originally had a stop at 96, okay? Which is kind of right around here. 96 was my level. We traded above 96. We closed right above 96 on June 7th, but the next trading day, we came right back below it, and it was just flirting with that 96 level. And I said, you know what? I'm going to give this thing a little grace. I'm going to give it a little patience for two reasons. Number one, it's a defined risk trade. I know that the most I could lose is the 260 I paid on day one. Secondly, the whole reason for being in this trade is this is an earnings catalyst trade. We've got earnings coming up in early July for Nike. And my bet was that this stock is going to follow through on the downside following earnings. That's just my educated guess, my prediction. I certainly can be wrong. And for a little bit there, the market was trying to tell me, Sean, you're wrong. You're very wrong. But for those two reasons, I decided to be patient with my exit, the defined risk, and I'm still waiting on that catalyst. Also, upon second glance, I'm thinking maybe I had the wrong stop level to begin with. I was leaning against 26, which was the high of this pullback here in mid-April. I was thinking that was the proper spot to place my stop, but maybe really it should be at the low of this support, because as we know, support often becomes resistance, right? So maybe 97 was the real level we should be looking at. And you could see how the stock traded when it got to 97. It couldn't stay above 97. So maybe that's the real resistance level. So I'm moving my stop to 97. That's up from where we originally started. This might be in the history of All-Star charts, All-Star options, the first time I've raised a stop on a short position. I've certainly never lowered a stop on a long position. This might be the first time. Again, folks, it's not something I normally do, and I don't recommend it. But I think for me, it was just an error. I noticed an error in my ways. I said, you know what? My original stop was too tight. That was the wrong level. And so far, the market is proving me to be right. But I know I'm waiting for the earnings catalyst in July. But if we do get a close above 97, if we come back above 97 before earnings, that's it. I'm crying uncle. I'm out of the position. I might regret it after earnings and see the thing crater, but rules are rules. I've already broken them once. No more breaking my rules. So that's the update on the stops. Let me check the questions here real quick. Give me a pause, or let me pause here while I just kind of read through here. Okay. Okay. There's really only one question here from Achilles. And by the way, Achilles, I don't know who that Shaun guy is. I've never heard of that guy. But my name is Sean, Sean. Anyway, what do you think is an ideal size for options trading? That's a really good question. That's a question I get a lot. And the unsatisfying answer I have for you is I don't think there is an ideal size. The only ideal size is what's ideal for you, right? Like think about it this way. If I'm I don't know, Bill Ackman, and I'm managing $1 billion or $10 billion, I don't know what all I know is he's managing money in the billions, right? What would be an ideal account size for him, right? Probably a very large one, probably a several million, right? Maybe $100 million account size. Whereas maybe you're somebody who's new, you just got out of college, you have your first job, you got maybe $5 grand salted away saved that you are comfortable risking. Well, $5,000 might be the right size for you. There's no ideal size. And it also depends on what style of options trading you're doing. If all you're doing is doing defined risk trades, maybe just simply buying calls or buying puts or doing some kind of debit spreads, then a smaller account size could work. You could probably trade just fine with a $5,000 account. Probably. If you're doing a lot of naked options, if you're like selling strangles, that's where you sell a naked put and sell a naked call, or if you like to sell naked puts, you might need a little bit bigger of an account size because there are higher margin requirements for naked short options. But if you're forcing me to pick a number, I think, I don't know, I hate to throw a number out there, but I'd say maybe 30,000 would be the minimum. And the reason I say that is because when you're above 30,000, then you avoid the pattern day trade rule, which applies to options just like it applies to stocks. And I'm not saying that I don't day trade these strategies, but every once in a while you might want to, maybe you make an error, you put a trade on, and you're like, oh, that's not the position I wanted, and you change your you want to change your strike or close it and reestablish somewhere else, and then that becomes a day trade, and it's not a day trade you intended to do. But if you do too many of those, you might get dinged as a pattern day trade rule, and they'll freeze your account. That's for people who have an account size under $25,000. So I don't know, starting at 30 seems like that gives you plenty of room to lose a little while you're learning and not run afoul of those rules. But look, you could definitely trade options with smaller accounts. You could trade with 10,000, you could trade with a 5,000. You just might be limited in some of the trades you could take, because one of the rules that I use that keeps me in the game, and I swear by it, is I don't like to risk more than 2% of my portfolio on any one trade. Generally, I don't risk more than 1%, but I will risk as much as 2 on maybe a high conviction trade, or maybe it's just a larger contract that I can't really get it much smaller than that. But look, if you're trading a $10,000 account and you're willing to risk 2%, that's $200. That's a reasonable size risk. If you're trading one lot, so you could probably do a lot of trades where your risk is defined to about $2, okay, which is $200. So I don't know if I answered your question there, Achilles, if I said that name right. Probably I'd say 30,000 is the minimum, but again, you could trade smaller if you need to. All right, that's it for the questions. Last up, guys, I'm going to address the new trades we've put on since we last spoke. We've got 3 new trades. I'm not going to give you the full details on these trades. The details can be found at allstarcharts.com. Head to the members section, head to the options section. You have detailed trading plans for every one of these trades, the thesis of why we like this trade, what we like about the setup, what strategy we're employing, where our stop loss is, where we're taking profits, if at all, and anything we might look for to make adjustments. All of those details are in every trading plan. If you don't have access to that, please reach out to us and we will get you hooked up. But real quickly, I'll just say that we've put on 3 new trades this week, all bullish trades. Hey, it's a bull market, right? We put a bullish trade in on eBay. You can see here, we got into this trade last week on Friday. We got a bullish trade in on Oxy, which is not performing very well for us yet, but we're making the bet that this 59 level is going to hold. But we do have a bullish bet on Oxy. And for anyone who's been following me a long time, we've done the same bullish bet on Oxy numerous times, but we've changed it up this time. So definitely check out the blog post on this trade to get the details on this Oxy trade, which is a little different than the previous ones. And finally, yesterday, we put on a trade in Wolf, ticker WULF, a cheap one. I don't usually do a lot of trades in these sub $5 stocks, but I like this trade. This feels like a hard trade, and hard trades can sometimes be big winners. So again, ticker WULF. This is WULF. This is a Bitcoin miner. All right, folks. For those of you who like them, I've got the updated stops here on the slide. If you want to pause the video and take a screenshot, here they are. These are all the stops we reviewed earlier. There's 6 of them. And finally, if you have any questions about anything you saw here today, or if you want to get involved in All Star Options, or you want to get into our chat room, shoot us an email, info@allstarcharts.com. Happy to help and happy to have you. All right, folks, I'm getting an early start on my weekend. So you guys have a great weekend. We'll see you next week. Until then, trade them well. Bye-bye.